Many borrowers lack mortgage knowledge. I was astonished to read a recent survey about borrowers who received home loans in the past 5 years, on an average spent only 5 hours researching their options for a mortgage, while the home purchase is typically the largest, most important investment we make. So the lack of mortgage knowledge can be very costly. I'm Donna Bishop, Sandcastle Realty Group, and former owner mortgage broker of A&B Mortgage Brokers of Florida. I belong to FAM, the Florida Association of Mortgage Brokers, NAM, the National Association of Mortgage Brokers, and as a mortgage broker, I am familiar with all types of loans. So I'm here to give you a few basic home loans that borrowers need to understand. One, what type of a mortgage do you have? Is it a fixed rate or an adjustable rate, a negative AM or reverse? Do you have mortgage insurance? Have you heard the term MI, insurance premium? Do you understand all the loan options that are available to you? Conventional, FHA, VA, USDA. What about prepayment penalty? Do you know the pros and cons of such a penalty? Okay, let's see what type of a mortgage you have. The types of mortgage are fixed rate. Your interest will remain the same the entire loan period. You always know exactly how much your mortgage payment will be. Or is it an adjustable rate, sometimes called an ARM? You can have low rates in the beginning, and later they will rise significantly over time, which could be a problem if you're not aware of it and you aren't planning for that increase in your rate and payment, because your interest rate raises, so does your payment. ARMs are usually offered with fixed rate periods of 3, 5, 7, or 10 years. Now, a negative AM loan is where your deferred interest is added to your principal balance. You are not paying interest-only payments. You are paying less, and this will reduce the amount of the equity in your home. You will end up owing a larger balance than when you originally started your loan. A reverse mortgage. These are loans that are available to seniors age 62 and older who have equity in their homes. This loan typically makes cash or a line of credit available to a homeowner based on the equity in their property and at their age. This is not the sweet loan they thought. Our foundation legal team has filed some formal challenges to the 2008 rule. So those are needed to be looked into if you have a reverse mortgage. Mortgage insurance, MI. Homeowners who purchased a home with conventional financing and a down payment less than 20% pay mortgage insurance, which will cost approximately $25 to $100 per month extra on your payment, depending on your loan amount. Once a homeowner has significant equity in their home, that 20%, they no longer need to pay mortgage insurance, but you'll have to contact the lender yourself because he won't automatically stop it. So be sure and call them and inform them that you're to that point. Do you understand your loan options? All types of loans? Many borrowers don't know that the loan options available to them. Conventional loans come in non-conforming or conforming. Conforming, this means the loan conforms or follows the terms and conditions set by Fannie Mae and Freddie Mac. These are considered conventional conforming. Now, the non-conforming is just the opposite, means the loan doesn't meet Fannie Mae and Freddie Mac guidelines. What are the advantages of these loans? Simply put, there are fewer underwriting hurdles than an FHA or a VA, which take longer to process, so it's shorter process time. With a conventional loan, you usually build equity faster and obtain with less hassle. Now, your FHA loan is a Federal Housing Administration loan and are one of the most popular loans available today. FHA loans allows more people to qualify with flexible credit and income guidelines with good interest rates, low fixed rates, or security of government-insured loans. Now we have a VA loan. These are loans that are guaranteed by the veterans for active duty servicemen and women. You need a certificate of eligibility. No down payment unless the purchase price exceeds what they call the reasonable value of the property that is required by VA. You must personally occupy the property, so it's got to be your primary residence. It also has standard guidelines and can be fixed rate or an adjustable rate loan. Prepayment penalty. Do you know what the prepayment penalty is? Do you have one on your loan? Well, it won't affect you until you get ready to either refinance or sell your house. And then you'll probably find out whether or not you had the prepayment penalty if you didn't remember signing on for it. Sometimes they give you this mortgage and ask you to do a prepayment because they're going to give you an advantage of some sort to stay in the loan a little bit longer. So let's recap. 1, know what type of a mortgage you have. 2, know if you have mortgage insurance. And 3, understand all your loan options. And 4, know if you have a prepayment penalty on your loan. Well, today we've only touched on the basics, but hopefully you have a better understanding and will research and find out the best one for you. If you need other help, if you need explanations, I'm here for you. Just call me. I'm Donna Bishop, Sandcastle Realty, at 239-560-3149, or go to my website, which is swfloridabroker.com. I appreciate you watching this, folks. And again, just give me a call, or please stay tuned for my next video. Next time, I'm going to be talking about curb appeal, preparing your house if you're going to sell it. Thanks for watching. Bye now.